It's a preview of the official jobs report and can significantly impact the market. The euro is struggling due to weaker growth prospects and potential US tariffs. A chance for the euro USD to keep falling until we reach this last low located at 0.95, which is a weekly low of September 2022. Hello everyone, my name is Isa Martinez, trader and analyst at xChief. This week, the markets are buzzing with action. From the dollar's rally and the euro's struggles to Bitcoin resilience, I will break down the fundamentals and dive into the technical analysis of the SP 500, the euro USD, Bitcoin, and obviously the xChief. Whether you are a beginner or a seasoned trader, this analysis will help you navigate the week ahead. Let's get started. And as we always do, we will start with the economic calendar. And don't forget, all the hours you are seeing right now are based on GMT -5. The first thing we are going to see is on Monday, January 6th, with the German preliminary CPI all day. This measures changes in consumer prices in Germany. It's a key indicator of inflation and can impact the euro. Higher inflation usually leads to stronger currency expectations, while lower inflation does the opposite. Then we continue with Tuesday, January 7th at 9 a.m. for the USD, the ISM Services PMI. This report tracks the health of the United States service sector. A reading above 50 shows growth, while below 50 signals contraction. Since services make up a large part of the US economy, this is a crucial indicator for traders. We will have at the same hour the JOLTS job openings. This data shows the number of job openings in the US, reflecting labor market strength. More openings suggest a strong economy, while fewer openings can signal a slowdown. We continue with Wednesday, January 8th, ADP non-farm employment change at 7:15 a.m. for the USD. This report provides an early estimate of private sector job growth. It's a preview of the official jobs report and can significantly impact the market. Then we will have the unemployment claims at 7:30 a.m. This shows the number of people filing for unemployment benefits for the first time. It's a weekly snapshot of the job market's health. A lower number is usually positive for the economy. And maybe the most important fundamental of the week, we will have the FOMC meeting minutes at 1 p.m. and this is obviously for the USD. The minutes provide insights into the Federal Reserve's recent meeting. Traders analyze them for clues about future interest rate changes or for monetary policy decisions. For Thursday, January 9th, no major events scheduled, and we continue with Friday, January 10th with average hourly earnings at 7:30 a.m. for the USD. This measures changes in workers' earnings and is closely tied to inflation. Higher wages often lead to stronger consumer spending. Non-farm employment change at 7:30 a.m. for the USD2. This is the main jobs report showing how many jobs were added or lost in the economy. It's one of the most important indicators for the US market. And finally, we will have the unemployment rate at 7:30 a.m. for the USD. This shows the percentage of the labor force that is unemployed. A lower rate usually signals a stronger economy, while a higher rate indicates weakness. And now we will continue with the most important fundamentals of the week. And we start mentioning that the dollar dipped slightly on Friday, but is still set for its strongest weekly performance of the month. This is driven by expectations that the US economy will outperform other countries and that US interest rates will remain higher than those of its peers. A solid labor market and persistent inflation have boosted treasury yields, increasing demand for the dollar. New policies under the Trump administration, including deregulation, tax cuts, tariffs, and stricter immigration policies are expected to support economic growth and add pressure on prices. However, there's uncertainty about when and how these policies will be implemented, which could temporarily pause the dollar's rally. On Friday, data showed improvements in US manufacturing, with production rebounding and new orders increasing, briefly lifting the dollar. The dollar index hit a two-year high of 109.54 on Thursday, but ended Friday down 0.28% at 108.91. The euro is struggling due to weaker growth prospects and potential US tariffs. The European Central Bank is expected to cut interest rates further than the Federal Reserve, adding pressure to the euro. Euro was last up 0.39% at 1.0305, but is heading for its worst weekly performance since November down 1.22%. Sterling rose 0.41% to 1.2431 on Friday, but is on track to lose 1.15% this week, also marking its worst week since November. The yen slid 0.26%, falling just below a 5-month high. The yen has been weighed down by the interest rate gap between Japan and the US, as the Bank of Japan remains cautious about raising rates further. China's yuan hit its weakest level in over a year at 7.3199 per dollar, pressured by falling yields and expectations of further rate cuts in China. In cryptocurrencies, Bitcoin gained 1.59%, trading at 98.158, showing resilience amid broader market uncertainty. Now we will continue with the technical analysis, and as always we start with the US dollar index. This last week there were developing several fair value gaps, and I will show them to you. The first one is this, we have another one here, and the last one is here. So there were several fair value gaps that you could use for your own trading, for your own strategy. And how we use these fair value gaps? This is simple. We wait for a pullback from the price, and once the pullback finishes, we can start searching with our strategy for an entry. And that obviously will be search for an entry for a new upward movement. The first movement we have here is this, that we can be trading for the next week. Remember that we are doing this video on Sunday, so this asset is not moving at all right now, but we can see maybe that now that the price has made a pullback, maybe it has enough liquidity, enough gas to start making another upward movement. If this fails, I would like to show to you at least two bearish targets. The first one is located at 108.536 and the last one is located at 108.232. So if the price does not react here in this fair value gap that I showed you, maybe we could have two more opportunities in this point or in this last point that I showed you. In my opinion, for the DXY, we should be searching for bullish movements. Maybe the bearish movements, maybe big pullbacks won't be so likely to happen. So before trading, take this into consideration. My targets for this week, when we have enough liquidity, when we have enough gas, as I explained to you before, should be bullish target. So I will leave to you just one target, and this target obviously is the last high, which is located here at 109.533. Once we reach this point, okay, maybe we could go for other targets, but I think this is the most important since it's the last high, is the higher high that we have right now. So if you are trying to do any trading with this asset, I will consider this as my take profit for any kind of trade that I can make this week. Now we will continue with the SP500. This is not a graphic that I feel so confident about because there is not a clear structure that I can see right now. It will be difficult, at least for me, to find an entry to trade the SP500 this week. For now, the only theme I'm seeing right now is a double bottom or two equal lows. Considering this pattern, maybe we will have a bullish movement for this week. Although I will not be expecting for such a big movement with an upward direction. Maybe the two main targets for this week will be this one at $6,049 and the last one obviously will be the last all-time high at $6,099. Okay, $6,100. If you think that you will have more opportunities, more bullish opportunities, or that you will trade a bigger movement that the one I'm showing to you, maybe you can also consider the next objective of the last calculation we did with you, which is located here at $6,198. Maybe this will be my last objective for this week if I think that the SP500 is going to make a big move this week. For the ones that think that SP500 is bearish, well, we can consider this last low, which is located at $5,829, and you can also consider this other low at $5,696. Just to take in consideration, I don't think that the SP500 is likely to go down, to fall. And that's because we have a lot of fundamentals that are supporting a strong economy in the United States and also supporting these assets to grow. So take that into consideration before thinking that we will have a strong downward movement. Now we will continue with the Euro USD. Maybe one of the worst graphics I have ever seen about the euro dollar. And this is because we have seen a clear downward structure, and it is not stopping. And why that is so bad for the euro is because if we are continuing with this downward structure, this is not the bottom. Just taking into consideration this graphic, not taking into consideration all the fundamentals that are happening right now with the euro, just the graphic, we can say that the euro USD will keep falling down, just following this downward trend. So maybe, yes, it could be an opportunity for the ones that are trying to accumulate euros, but in my opinion, I also think that if we continue with this downward structure, maybe we could see lower lows with the euro dollar. And if I go further with this, if I see the weekly chart after we fill this fair value gap, it is a high possibility that if this fair value gap is not enough gas for the euro USD, there is a chance for the euro USD to keep falling until we reach this last low located at 0.95, which is a weekly low of September 2022. Take that into consideration just to keep in mind. Finally, let's see Bitcoin. And the most important thing that you need to consider with Bitcoin is that Bitcoin needs to break this part of the price to make a breakout of the $99,887. Once this breakout is done, maybe after this we can confirm a market structure shift in the 4 hours interval, making a pullback where we can buy Bitcoin if you want to buy Bitcoin here. By the way, I don't think this is the best price for Bitcoin, but we can buy Bitcoin here and the price could keep moving upward in order to reach the last all-time high, which is located at $108,000. Objectives after this all-time high maybe will be $110,000, and after that obviously the $120,000, which was an objective, not only one of my objectives but also one of the targets of MicroStrategy and obviously Michael Saylor. So for now I think Bitcoin has enough gas, enough liquidity to try to reach this part of the price, 99, almost $100,000, and after this we can see a pullback. But the target for this week should be try to reach bullish targets and try to reach this point of the price if you want to see a Bitcoin that can continue with this big rally, with this big upward movement that we were seeing since the low in the $15,000. So if you are trying to have bullish targets, I think this is a solid bullish target. But if you think that Bitcoin will fall and will keep falling, okay, you can consider in this chart, in this interval of 4 hours, $96,000, $92,000, and finally $91,271. Just take this into consideration if you are bearish with Bitcoin. But just a warning, remember that we continue with the rally of Bitcoin. It is difficult to see a big fall with this asset. Thank you for watching, and if you found this analysis valuable, don't forget to hit the like button, to subscribe to our channel, and to share this video with your trading community. And if you're ready to take your trading journey to the next level, sign up with xChief today and start trading smarter. Link in the description. And see you in the next video.